In this video, traders, we are going to look at segmenting the trade execution process. If you're having trouble with your trading, this may help. Stay tuned. Hey traders, a very warm welcome to you. Okay, so I know that traders, our journey is fraught with different pathways and challenges and hurdles, and sometimes it looks like we've got so much to do. We've got strategies, we've got this, we've got that, the other, we've got so much to improve on. We try and do it all and we don't make any progress. So here is a method of identifying and splitting down the trade execution process into multiple segments so you can work on each individual segment at a time so you don't feel overwhelmed with it. And hey, even trade execution is only part of the problem. You know, we've got this, we've got that, we've got so many multiple things to work on. This is even going more granular. So trade execution, let's put it down into segments, and it will help you improve your trading because you can focus on individual segments. Segment number one, scanning. So this is the phase where we're hunting for opportunity. What is the process you've got for that? Do you have an automated filter system that presents trading ideas to you? Do you have an ad hoc thing where you're constantly looking at the markets? Do you scan at a certain set of time? An alarm goes off if you're day trading, or if you're swing trading, you scan at a certain time in the evening. You know, what is your process for that? How can it be improved? How can it be refined? What exactly are you looking for when you're scanning? Are you looking for a certain setup? Are you just eyeballing a chart? Are you ripping through 100 charts and putting the favorite ones and then scanning through those? How are you doing it? The process, the schedule, all that stuff can be adjusted and tweaked to give you the peak performance. Okay, segment number two, or stage two of the trade execution process, is identifying. So spotting the setup. After you've done your scanning, you're going to spot one or two setups, whatever it may be. How do you do that? What makes you say that's a good trade? What are you looking for? What are you doing when you spot that setup? How do you manage that? Are you so excited you want to get a trade straight away? You know, how do you look at it? How do you review it? Do you review it objectively? Does it jump out at you? This kind of stuff, the spotting of the actual target. All right, now you're kind of structuring the trade. You spotted it, you're structuring, you're deciding how to do it. So entering, pulling the trigger. What do you need to see to pull the trigger? Have you got a filter and trigger system, or have you just got, hey, that looks great, I'm going to pull the trigger and worry about my stop later? How is this structured? Again, we're segmenting that entry criteria part of it. You've already highlighted it. You already know what you're going to do. You are already pulling the trigger or putting the limit in, however it may be. Very, very similar kind of stuff. What's the process of that? How can that be improved? How can it be refined? How can you make it easier on you so you can get more profitable trades out of it? All right, number four, managing the trade. So I've put setting stops and targets in with the management section. That probably will come in with the enter, but you get the idea. If we can segment it, then that's good. So where are your stops? How is it fitting in with your strategy? How are you deciding the stops? How are you deciding where to scale out? Are you scaling out? Are you scaling in? What makes you make that decision whether you're going to scale? What makes you make the decision where your exit's going to be? Is it predefined, or are you looking at a chart and deciding just on the fly? If so, how can you improve that process? How can you develop something that identifies potentially very lucrative trades that could go on for a long time or could run? How do you identify and differentiate those between scalps? All this kind of stuff, again, comes into here, and there's a lot that packs into each of these, and you can see the advantage of kind of splitting this up into segments. Number five, the exit. So exiting the actual trade. When we go in and we actually exit the trade, pull the trigger to get out of the trade, why are we doing that? What's the process? Is there fear creeping into this decision? Are we exiting when we shouldn't do too early? Are we exiting just because we see a good profit? Are we exiting correctly just because on our decision that we've planned to manage the thing? You know, how are we doing it? If we've recognized this, have we got any process in place for stopping us from jumping the gun, stopping us from pulling out the trade too quickly? Is there something we can implement in that part that holds us back and maybe adds a stop or tightens a stop or does something instead of getting out too early or too late, whatever it may be? You see, we're just trying to now identify things to improve incrementally in each section. Number six, guys, reviewing. Important part of the process, analyzing what's happened with the trade. How has it worked? Has it worked well? Do you even have a review process? If not, step one, put one up. You know, what do you look for? Have a 5-step review process. The trade I took, what I took, why I took it, what I got in, what was the conditions at the time, all that kind of stuff. So segmenting these things into scanning, identifying, entering, managing, exit, review. Even though it's only part of just the trade execution, it means that you can really drill down and really get to a microscopic micro level on on any problems you've got. You know, you might very, very quickly identify something that says, hey, I'm vulnerable here. My exit is poor. My exit is struggling. Do I need to go back and adjust my trade strategy? Do I need to be more disciplined? What do I need to do it? But the important thing is, rather than you just saying, oh, my trades are I don't know what's wrong with my trades. Maybe I need to find better trades. Maybe I need to, pull the trigger a bit earlier. You've eliminated that and you said, hey, the biggest weak spot is this. Let me now find a solution for that so I can improve it and make it a more positive experience, the exit. Then you look for the next one, the next one, the next one. You see you're doing incremental improvements, and that is how you make a big improvement in your trading. Rather than trying to bite off the whole chunk and go, I want to improve as a trader, you're saying, hey, where's the most weakest part out of all these? Aha, I found it. I'm not very good at spotting the setup. Aha, you know what? I'm missing great trades because I haven't got a very good scanning system in place. I don't scan at regular intervals manually, or I haven't got an automated scanning software that alerts me. That could be an easy thing to fix. In which case, great, you fixed it. Very simple. I just day trader. I scan every hour for a new setup. Fine. Whatever it may be. The point is you can take an actionable step to improving that, improving the next, and get a good benefit from the end of it. All right, guys, 6 segments and ways of segmenting the trade execution process. See you in the next one. Take care. Keep the risk managed. Goodbye.